Hello traders, Gary Wagner here. Just about 10:10 in Honolulu, 4:10 in New York. It is Monday, September the 12th, 2016, and we are looking at the Dow Jones Industrial Average after selling off almost 400 points on Friday, staging a pretty brilliant recovery, closing up today by about 239 points, so over half of the losses gained back today, 18,325, putting it up 1.32%. Standard & Poor's 1.75% in terms of the net gain. Take a look at this daily candle here, a very, very strong piercing line in which we see the S&P E-mini close at 2153, and then NASDAQ closing up about 2% at 4765. As we spoke about on Friday, the NASDAQ tends to outperform the market as we go into rally mode, but it also tends to have a greater percentage drawdown on corrective periods in the market. Crude oil, interestingly enough, up about 0.5%, 0.4% at $46.08. And lastly, a quick look at the U.S. dollar, which is fractionally lower on the day at 95.14. So traders, today it was certainly oil, which I believe was really following in pursuit of the U.S. equities markets, which staged a dramatic recovery after being down about 400 points on Friday, gaining back 230 plus points. Today, of course, I'm speaking about the Dow Jones Industrial Average. We are looking at a weekly chart of crude oil. I tend to like the weeklies more in crude oil. We can see that even with this sell-off that came in as the market hit 52 and then tracked down to 39 and tracked back up, if we look at the big picture, and that's kind of what this bullish channel is, we can see that it has been remaining within this particular range and remaining in it as it traded up throughout this channel. Now, what I am noticing in this market, though, is a compression of sorts, a series of higher lows. We can see that right in here. We're also getting a series of lower highs. When we put that together, that is a compression triangle. We are quickly approaching the apex. Typically on a breakout, it will move to the prevalent direction, the side of the prevalent direction, I should say, which based upon this longer term study that we just talked about is up. So we could see it track up when it releases some energy. But my sense is, as I've said for the last couple of weeks, that what we will look at will be basically a market that's under pressure and sideways trading activity. So traders, absolutely no doubt, a dynamic recovery in the market. That one-day sell-off, at least for now, seems to have been thwarted. And in terms of a technical basis, we've got this point at 2100. It is a 38% retracement, and it's really a retracement from the smaller moves in which we plot these lows back from the end of last year, beginning of this year, and we take them in essence up to these highs that came in, these former highs that came in, I should say, because we haven't accounted for these new record highs. Of course, this is a weekly chart that we're looking at in the S&P, and although it's only showing 1 day's activity, look at the strength of the piercing line that we get on our weekly chart. And traders, when we convert our weekly to a daily, because we had such a dramatic sell-off on Friday, tremendous recovery today, about the only thing that really compresses are these series of very, very small, minute moves in the Standard & Poor's. Of course, it correlates to the Dow Jones Industrial Average, in which the market absolutely flirted with these new all-time highs, but really could not take them out. We talked about the fact that as this market was trading, and these were the former highs right in here. Let me get the proper pointer, but the former highs right in here. We then had this break right in here, this candle. That's, as I've labeled it, a scouting party. It is a pattern identified by Steve Nissan. And then we get our beachhead. In other words, we get an area in which this particular price point in this particular market now became a level of support rather than resistance. Now, although we had lows that went into the market on a number of days, excuse me, we effectively, except for these 3 days here, had closes above that beachhead and above those new record highs. That, of course, was up until Friday's activity where we broke, and we broke hard to the downside. The market this morning hit a lower low. As I said, this is a 38% retracement, roughly at 2,100. Once we hit that, all bets were off. Money really entered the market. We saw this market genuinely gain a lot of ground that the market had given up 1.62%, 34 points. Definitely a dynamic pattern, and in terms of the pattern that we're looking at on a daily chart, it is absolutely a piercing line also. Now, as you know, to actually take a call on a piercing line the following day, meaning tomorrow, we need to see follow through in the market. The candle would look something like this. In essence, it has to be a green candle. It has to have a higher high, and it has to have a higher low. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.